was around 6.7%. But this is lower than the 9% recorded in the same period of 2013, that's in the first quarter of 2013. We have heard the IEA declare that business confidence in the first quarter of 2014 was the lowest in Ghana for years. And Bank of Ghana has also confirmed that there's low business and consumer confidence in the country. Now, many analysts expect growth this year to be lower than the minister has revised the growth rate downwards target from 8 to 7.1%. But as I said, achieving this will still be challenging. Now, the downside risks to growth, to the growth outlook, include erratic energy supply. We don't know when that situation is going to improve substantially. There's a squeeze on public investment, as I've said. I believe that this will continue. You see, the attempt to consolidate the fiscal position, the brunt always invariably falls on investment. Macroeconomic instability is not good for investment and business, and therefore will affect economic growth. And then rising credit costs will also dampen economic growth. On the other hand, I can see that there's a possible recovery in our commodity prices. I mean, gold and cocoa has already been recovered, but maybe gold may also follow. If that happens, it will help boost our growth. And then also we are told that, oil production will probably continue to increase, and then maybe gas production may also come on stream. And this will give some impetus to growth. So it's really very difficult to be able to say now, whether even the 7.1% growth target can be achieved. It could be lower because I can see the factors weighing down growth, maybe outweighing those that are likely to give impetus to growth. Now, when it comes to inflation, the minister has revised the target upwards from 9% to 13%. I see this as very unfortunate because, as a country, we want to validate higher levels of inflation instead of trying to rein it in. It's like we are saying, inflation rates are already high, so let's accept it. Of course, we are at 15%, and he is saying that by the close of the year, we'll probably come down to 13%. Now, the upward revision recognizes the reality because inflation, as I said, is already at 15%. But achieving the new higher target will still be challenging and will depend on how the driving forces that I mentioned above, fuel and electricity price adjustment, cedi depreciation, and then higher food inflation, and then fiscally induced demand pressures, how they evolve will determine the final inflation outcome. I must say that if we intend to tame inflation on a durable basis, we need to address these driving forces, and in particular, we should be trying to close the demand-supply gaps in the economy. Now, when we come to the fiscal policy, the deficit has been revised upwards from 8.5% to 8.8%. There isn't much in there. But again, it's unfortunate that we do not keep to the original target, and we have to revise it upwards. When you do that, you keep changing your policy targets, like you undermine your credibility of your policy. Now, the final outcome of the deficit will depend on several influences. Now, slowing growth will adversely affect some components of revenue, including corporate income, corporate taxes, I should say that, corporate taxes. Now, CD depreciation will raise some components of revenue, such as import duties, but also hurt some expenditures, such as external debt service. And government's own payments for imports are also going to be higher in CD terms. Now, grants are likely to experience large shortfall because of donor concerns about fiscal discipline. Now, donors are withholding funds from the country because they are not happy about the way that we are managing our public finances. Now, wage payments will likely be higher due to the coming on stream of COLA because of any allowance adjustment or something which the government has granted public sector employees effective from May this year. I think it's 10%. And payroll, the usual payroll management challenges. Now, interest payments in general will likely to be higher due to higher borrowing and higher interest rates. Capital spending, 50 cedis. Do you know? We count in those terms, but the CD is the value is very high. That's also part of the contributed to the high inflation in this country. So I've said that if we are to arrest the CD on a long-term basis, we have to fundamentally transform this economy by diversifying and adding value to our exports, promoting domestic industrialization so that we can reduce our demand for imports, and then also entrench fiscal discipline, because fiscal policy tends to be a source of demand pressure, which also contributes to depreciation of the currency. Now, in conclusion, I must say that the economy has been affected by some external factors, but many of the sources of our challenges are of domestic origin. Because of that, domestic policies have an important part to play in resolving the challenges. And as a priority, we have to undertake serious fiscal adjustment by taking, that's why I listed all those revenue and expenditure measures absence. The government must be bold enough to take those measures. These are the same things that were said in Seiji and have been said again and again. We need the political will to take those measures. Because we need fiscal adjustment because it's good and critical for consolidating macroeconomic stability. And it is also necessary for regaining investor and donor confidence in order to have a reflow of resources into the economy to alleviate the acute liquidity crunch. You see, we are like an economy under sanctions in Ghana. Now, the donors are not willing to dispense their support. That is part of our suffering. And then you have heard the president be mourning this, and appealing to donors, whether he was in Brussels or Ghana or wherever. But they are saying, no, because who wants to give you your money, his money, and then you go and use it to pay singles fine or subsidies or something? They want to be sure that you use it for productive purposes. And also, your budget deficit, they want you to adjust and cut it down. Okay, it's too big to be financed. The public sector is too big. Government is too big. And if you don't do that, then they will continue to starve us. Now, I must say that unless we are willing and able to implement a homegrown fiscal discipline regime, the alternative will be to have one imposed from outside, including from the IMF. Because we need it to be able to unlock the much needed donor support of the economy. If we cannot discipline ourselves, then we have to submit ourselves to the IMF to discipline us. That's the only way that we can get all this money that are locked up being released, and it will give us a lot of relief, even the seed, help forward the seed and all that, and then help support the budget. Okay? Now, of course, if it comes in even as a project support, and we have money for projects, then we can use maybe money that we had earmarked for projects to do something else. And then